Good afternoon, ladies and gentlemen. This is Brad Matheny. This is the MENT.com metals video, gold and silver. We are going to focus on this silver chart right now, and we are going to highlight the ongoing discussion that I've had related to the setup from 2003 into, this is what I call the setup phase, this is what I call the breakaway phase, this is what I call the expansion phase. Then after the expansion phase, we get a rally out of the expansion phase, potentially into some kind of a crisis pattern. This may or may not happen. It looks like I have something up here I need to get rid of. And then we end up in the extended expansion phase. So understand that the real expansion phase takes place back here. Then we end up with a, let me just do this. Trying to get my mouse to cooperate. Then we end up in a bit of an expansion phase here where change this to this color and this color. So understand that the extended expansion phase is really a breakaway that could have continued all the way up, but we need, like I said, a moderate crisis event to shift the focus and to move into an extended expansion cycle taking place. So, okay, looks like we have something here that is show stats. There we go. Okay, so now where are we at right now? Here's our bottom, okay, and this is the base bottom that we have set up. Here's the setup phase. And we are moving into this expansion phase. The expansion phase, the next phase up to this phase here, is going to give us the breakaway phase. Now let me try to drag this a little bit. Maybe towards that apex. Maybe towards that apex. So here we have, with the expansion phase, this is the setup phase. The setup phase is going to likely move us to, where was I? Here. The setup phase is already bottomed. You can see where I drew the support channels here. This was back in September 2022. Now we're moving into an aggressive phase. It's going to move us up here to $40, $42. Move into this consolidation phase. Maybe attempt to stall out and then move in to the expansion, which is going to be our move to the expansion phase. And expansion phase is going to be, get rid of this, going to be this move here. I'll just draw this coming back down and then extending. This is going to be our move. So silver is going to move from where we were down here, $20, $21, likely up into the $41, $39 to $41, $42 area before it tries to peak out. Then we'll probably attempt to consolidate above the $31 to $32 area here through this extended expansion phase, and that's likely going to transition all the way through the end of 2024 into 2025. At that point, through this area here, we may consolidate a bit further out into maybe June, July, August, September of 2025 before we see this move up into the early expansion phase. And this is going to put us up into the $63, $64 area. Consolidate here, and then at this point we are going to likely see, and I will point this out, this is an error and this is an error, not necessarily an error, but possibly a little too wide. At this point out here in 2028, 2029, we may see some sort of a crisis event possibly coming down to the lows of the expansion phase, possibly coming down to retest this area, this consolidated area right here, which is the breakaway phase. So understand that there's a very strong likelihood that we could end up with a move down into this area on some crisis event. Then we're going to move into a recovery event back up into this area, and then move all the way up into possibly 110, 120, 140 silver. So how am I doing this, you ask? This is really goes down to the fact that I believe we are in a repeat of this structure here. We're in a repeat of this structure here, the same like we had in 2023, or sorry, 2003, 4, 5, 6. I think eventually we're going to be moving into this expansion phase with the economy. There's a ton of money in the economy. Fear is building. That money is going to be shifting away from the economy. Now remember, you know, we have, let me do this. We have, okay, the SPY doesn't go back that far, really? Oh, I got the wrong one. There we go. So here's the SPY moving upward throughout this phase. So look at how the SPY moved up here throughout this phase. The SPY moved upward up into this double channeling formation throughout the expansion. Then we had the breakdown. So this was a roughly, move my mouse at the end, 40, call it 46% rally in the SPY. And we could see the same thing happening here. We could see the SPY rally from these levels, potentially from this setup low back over here, rally maybe up into the 525, 530 area. Okay, then like I said, then we may start to see some sort of an unraveling take place, and that could be an area where we start to see maybe a housing crisis or what have you. Now eventually the Fed's going to have to come to some rescue or come to some conclusion, and then like I said, the next phase, whether we see the S&P rally out of this or move downward, we don't know yet. But the long and short of it, if this is what I believe to be a wave 3 peak, this is going to be a wave 4 downside move. And what I believe is actually happening is, and let me try to change this. What I believe is actually happening is we are going to roll downward, set up a new base down here somewhere, roll back upward into an extension, roll back downward, roll back upward into some kind of a move by 2026, 2027. Then we're going to start to move into a consolidated phase back downward. Because if my analysis is correct, what we have is very difficult to see, but we have a wave 1 up to here, wave 2 basically down to here, wave 3 all the way up to here. So here's our wave 1. After the collapse, here's our wave 2. And remember, this was Fed driven, so this was a very unique environment. We've never seen anything like it. Come on, mouse. And there's our wave 4. This becomes our wave 5. This becomes the end of our wave, and then at this point, we have a chance to be able to pull back, potentially wipe this out, and where I believe we're going to find real support is going to come down into this 2015 cycle area, which is where I drew this. That's where I think we're going to come down and find real support after the peak. Now understand that where I've drawn this, we are looking at, for silver, we are looking at a very consistent move from roughly the $20 to $22 up to about 36 to 39, maybe 41, 42, consolidating into April of 2025, maybe around that time frame, then moving into an expansion phase higher from about, let's call it August to July, August 2025 upward, which is going to put us into the 60, call it 55 to $65 area, consolidate with the chance of a crisis event sometime around September, October 2029, leading to a massive rally phase in silver. But the same thing that you're seeing here in silver is happening over in gold. So gold looks a little bit more complicated, doesn't it? Yeah, I spent a lot more time playing around with the gold chart than I do the silver chart. Here's the same setup. So here's your 2023 setup phase. Here's your breakaway phase. Here's your expansion phase. Here's the rollover down into the expansion phase, reconfirming the support, and then here's the big rally phase. If gold does the same thing over here, as I suggested, we are going to be looking at, kind of hard to see, but I'll spread it out. We already have the setup phases here in a little rectangle right there. That's the setup phase. Gold is going to attempt to rally out of this up into 2,300 to 2,500, maybe 2,600 into the breakaway phase, maybe a little higher, and then gold is going to attempt to move up here again near February, March, April 2025 up into this 3,600, 3,700 area, and then stall out. Eventually, ladies and gentlemen, we are going to get that that crisis pattern. So we are going to get that here. We are going to get that breakdown crisis pattern and attempt to move back to the upside. But again, we're not there yet. What we're looking at right now is the move, and again, I'll move this to weekly. And I just want to highlight the fact that everything I've been telling you has played out absolutely beautifully. This thing get out of the way. So here we are. We dragged this sucker over here. And so now, where are we at, ladies and gentlemen? We are at this move right here. We've bottomed, just like I told you, way back over here. We've bottomed. We're moving away from the setup phase. This is our new base. This is our new bottom. We're moving over here into the breakaway phase. My estimate for the breakaway phase is basically a minimum of 2,200. It's got to get above that level. Really, the top is maybe 2,700. And then once we enter into that breakaway phase, we're going to get some consolidation, some rotation, and it's going to last all the way through the election, which is way back over here. Let me draw a vertical line for the election. There's the election. I think it's going to last towards the election, and as I mentioned to you with gold, gold could move, substantially higher. This is gold. So gold could be up in the inching its way. In reality, gold could rally up into here, reach a peak, consolidate like I've drawn here, reach another peak, consolidate, and then start to inch its way upward in this area. So understand, by the time we get into the election, If gold is up above, say, 27, 2800, by the time we get to the presidential election in 2024, you could be watching silver play catch up. So understand that silver, as I tried to show you before, let me draw, whoops. So November, there's the election. And what I was trying to say is that we could see silver attempt to play catch up at this point. If gold really starts to move upward here, silver could, instead of consolidating like I've drawn here, silver could really start to, maybe after the election, consolidate a bit and then start to really try to catch up, meaning silver could be above 50 bucks by early 2025, early mid 2025. And that's huge. It's only, year and a half away. But with setting up, I guess the most important thing I want to tell you is everything that I've told you is playing out just perfectly. I can't explain this to you cleanly enough that this is the phase we're looking at right now, and then this is my upward range that we should be targeting. This is silver here, and let's go ahead and take a look at the custom indexes. So the gold cycle phase index is consolidating. We're seeing distribution. We're not seeing massive accumulation yet. This is good for traders. That means you still have the opportunity to try to get in, get some physical, get into position. This is very solid, and we may see literally another 60 or 90 days of this taking place. Okay, so you got maybe 60, 90 days to position and think and plan to hedge your accounts accordingly. The gold trend index is basing, this is a monthly chart, basing and bottoming. You can see we keep getting these higher highs, higher lows. The next big move here could be really good. This would show that gold potentially back up above 1970, 1980, 1990, maybe even above 2000. But we're getting this very solid accumulation in this trend index here. Standard deviation channel, big breakout. I mean, look at this. I love this. This is exactly what we want to see with regard to rejection. Trend came down, consolidated after many weeks, then rejected back to the upside. Now we're looking for a breakout move. Ideally, what we're looking for is, some sort of consolidation back up in this area, breaking above this channel, and then building some momentum for a breakout move to the upside. Metals trend index consolidating. This is slightly different than the other, but consolidating, moving higher, basing, and like I said, we've reached this level, we've consolidated. I don't think it's going to go down much further, folks. I think we're in this accumulation phase, which is going to last many years. Metals valuation cycle index, big upward trending here. I mentioned to you that we could come out here and test this Fibonacci price amplitude arc. Very likely that we could, and until we break this channel across these highs, we could continue to slide into kind of a sideways momentum base here. And once we reach this area 2, 3, 4 months out, maybe get some big breakout. But super exciting. If you're a gold and silver nut like me, then this is, I don't know how to say it. I mean, look at this. This is, how would you like it if you knew that you were buying at the right time at $20, $21 an ounce, waiting for the 60, 80, 90, 120 an ounce silver that's maybe only 2 or 3 years away. Maybe. Okay, next. Metals valuation video continuing to flag out. We got to watch this to see how this plays out. Like I said, the next move is going to be up, in my opinion. It looks like everything is setting up for gold to get above like 22, 2250, maybe 2400. It looks like silver's getting ready to maybe do that, that 30, 31, $35 an ounce move. And that's going to set some heads swiveling. I mean, really, if gold goes up to 2300 new highs, silver goes up to 30, 33, 35, you're going to be looking at traders, global traders, really saying, what the heck is going on? Why are metals hedging risk like this in a global market environment? So understand that metals are actively hedging perceived risks right now. Gold cycle patterns for next week. We have consolidation, inside breakaway, harami, crush, which could be up or down, and then we have a reversal rally. So next week we have, we'll really see how this plays out. Harami inside day and consolidation are fairly solid consolidation patterns. Inside breakaway means we're likely to see some sort of a trending bar. Crush is a trending bar, could be up or down, could be a big up move or a big down move. And then reversal rally would indicate that crush is a down move and that the reversal rally to the upside on Friday of next week could prompt us into a solid upward trend. Then the following week we have a breakaway, then a blank bar, then an inside breakaway, then a momentum rally, all indicating upward trending, except for watch on the 20th. The 20th could be some news, could be something very interesting. A crush pattern is typically either a large up or a large down bar. And lastly, I think we have the custom metals trend index. Really looking for it to get back above into this, what I call yellow brick road here. We were in this mode before. We consolidated. We rallied back up, stalled. I really want to see it rally up into this mode and continue to trend. That would be a beautiful sign, and I'll show you a monthly chart of this next time. But that's it. So again, follow my research, trying to change what's going on. Understand that the real value of hedging into gold and silver. You remember 2006, 7, 8, 9, 10, 11, when gold was going crazy and you were going, oh man, I wish I'd gotten into gold. Well, that's where we're at right now. Remember, we are right here. Okay? We are right here in the big picture. We're still trading right over in this edge. So I'll draw a line. We're right there. Okay? So, did you, if you could, and say with reasonable degree of risk that you can take this trade, and reasonable degree of certainty that something like this might continue to play out, if you could position yourself effectively for the next 900% rally in silver, what would you do? What would you do? Would you do it? Would you consider hedging yourself effectively and preparing for what's coming? Or would you just continue to play along with the NVIDIAs and Teslas and Microsofts of the world? You ask me. I know what I've already done. I was buying into gold and silver way back over here, knowing what was coming. And I've already loaded up a nice little position that I'm just waiting on. I mean, I was buying silver. Crap, I was buying it when you could buy scrap silver for $11.50, $12 an ounce. I mean, I was getting 1 ounce silver coins, $15.50, $16, as much as I could afford. Just loving the idea that it's coming. So anyway, I hope you're paying attention and following. I'm the only guy out here that's telling you this, and you need to pay attention to what's coming up, because it's only a couple of years away at this point.